current scenario and the current market status unfortunately has reached a flexing point where it will not be just a crisis, it will be a disaster. Times when it is more important for me to protect my capital than to generate returns.
Can Donald Trump save this?
Now, what we raise in 1 year, we used to raise in 1 decade. The kind of borrowing which has been increased by corporates and governments are unprecedented. This debt will not be resolved someday. Someday that balloon has to burst.
And where does this leave Indians?
India cannot be the only oasis on the planet.
Welcome, viewers. Today, we are starting a very special podcast, and this is being started by SPA Capital Services. And the idea behind this very podcast is to educate retail investors about the current market scenario specifically. Markets have been really hot, but sometimes things do get to a point where you need clarity. Sometimes we do miss out on certain fundamental factors which we overlook in the market. And to give us that clarity from today onwards, we have Mr. Sandeep Parwal, founder of SPA Capital Services, who has been an industry leader in the wealth management space from last 30 to 35 years. And to give you a sense how big SPA is, they're serving across all classes of investors, including HNIs, retail investors, family offices, and government bodies as well. Today, we'll learn from him what are some of the current market scenarios that you should be thinking of, how the market is looking in terms of its futuristic point of view, and we'll take a lot of intrinsic details that is not being said in the open markets right now. So, welcome, Sandeep sir. Welcome
Thank you.
to the podcast. In the start, if you can just give us a brief journey of yours, because you've been in the industry for almost 30 to 35 years, and that's a lot of experience. That is, I think, the young investors who are today in the market, you've been serving in the industry long before that, right? So if you could, give us a sum of your journey from where it all started and to how you have reached here today.
I started my career in 87 as a practicing CA, but somehow I couldn't continue the CA related work, although I was fairly successful, but I didn't proceed on that line. I migrated completely to financial services in 1995, surrounding my certificate of practice also. I have done all kind of financial services activities from IPO management, debt syndication, mergers, amalgamations, management of PF trust, management of other organizations also. In 1999, we started mutual fund related advisory, wealth management related advisory. Had the privilege of managing funds all across India and have had sort of a leadership for a couple of years in some segments in the industry.
So, sir, like you said that, markets at the moment do look expensive. And while, I was talking to you the other day, you told me that obviously there have been certain talks that markets do look expensive. Certain experts have called out that. But in your personal view, what you told me that we could be headed towards another 2008 like financial crisis that occurred
Absolutely.
almost 16, 17 years ago. Now, that's a very bold claim to make, right? We all know the famous Michael Burry, that when he timed the market during that particular crisis, and he has been trying to do that again and again. He keeps making certain claims, but nothing comes by, right? And here you now have an opinion where you see specifically the trickle down will happen in the US markets because if that crisis is again to happen, right? Now, in order to back that claim, what are some of the trigger warnings or some of the fundamentals that you see in the global markets or specifically linked to the US markets, which can, eventually lead to this financial crisis again?
The current scenario and the current market status unfortunately has reached a flexing point where it will not be just a crisis, it will be a disaster. And I'm really apprehensive and concerned about the current market scenario. At least on the global front, all the major economies, the so called developed world, is undergoing recession. The level of debt, which has increased over last 5 7 years, specifically after COVID. Now, what we raise in 1 year, we used to raise in 1 decade.
Yeah.
The kind of borrowing which has been increased by corporates and governments are unprecedented. The rate of interest has also changed substantially.
Right.
Because of inflation and other factors, the rate of change is meaningfully. It will be very difficult to service that debt. Very simply, for any economy which is consuming more than what it is generating, they are always filling the gap with the debt. This
Right.
debt will not be resolved someday. Someday that balloon has to burst. Otherwise, if you are not repaying your debt, just keeping it rolling over and just keep saying that, okay, we have been able to manage and service the debt, it is not sufficient. Now, when is that date is the big question. I feel that we are closer to that date.
So when you say that we are closer to that date, and you see that the debt has finally gone to a level where, let's say, fulfilling that debt from the banks, or let's say the Fed, would not be possible. But how is it different? Because what I remember from 2008 specifically is that that was a crisis that was built on giving home loans at very cheaper rates. Even people who ideally you would not assume that they can afford homes had 5 homes, right? And they were paying EMIs for those 5 homes. And when finally that moment happened where home buyers could not service those EMIs, the bubble kind of burst, right? Is it the same scenario that is going to take place, or is this situation different in terms of the debt that these banks have, or the like how Feds have basically placed it?
A 2008 was not only about the home loans. It was about derivatives and following on and multiplying the same loan and covering up your debt, your unserviced debt under the carpet. It was a derivative play. So that was a completely different story, which was not addressed. A typical problem which is being done by central banks globally is they, instead of addressing the problem, they are postponing the problem,
Yeah.
kicking the can down the road. Procrastination, whatever you want to say on that account,
Right.
is what is the trend. Unless you make money and you are profitable, how can you reduce your debt? So it has just increased problem. That time we were talking $10 trillion, $8 trillion, $7 trillion kind of numbers in
Right.
various formats. In COVID days, we were talking 20 trillions, 24 trillions.
Right.
Today we are talking 36 trillions. I'm just talking the American debt.
Yeah.
The pace of increase of debt in last 5 years has become phenomenal. Above that, the interest rate also, which used to be 1.25%, has gone to 4.5%, 5%, and so
Right.
today 5% plus on a 30-year. This has really made the debt unserviceable. The fundamental thing is that unless you become cash flow positive in terms of your borrowings and earnings, you cannot service your things, and that thing has to fall.
Let's say if the debt stands at $36 trillion, and but one argument, let's say, if I were to make against this, would be that what was different in 2008 was that those losses basically got realized, right? It did hit the books, but here the case is that I'm playing the devil's advocate here, that the losses which stands currently on the investments are unrealized losses, right? And banks can keep servicing them, and like how by just printing more money, by printing more dollar, right? And this is something that we have been fed this narrative over and over again, right? So uh, again, the same thing that you said, that they always postpone the problem. What I am trying to say here is they can again delay the problem, right? What do you make of that?
Two things. A, delaying is not a solution. Delaying is perhaps simultaneously you are increasing the pain also. Now we are at an inflection point where the pain is supposed to really fall through and it is going to become painful. It is not that it is happening for the first time. The global history has that every 100 years, 120 years, 150 years, there has been a reset of global reserve currency.
Hmm.
Now we are at that stage because US has been procrastinating, postponing its debt requirements and servicing it by what you call as printing of dollar. Although how the dollars are printed, we can talk separately.
Right.
But with that, that global reserve currency reset has to happen. The way I'll talk to you in a very simple way, like say Indian economy is evolving. What our forefathers did, what my grandfather did, what my father did, what I did. We always work on an agenda because we were coming from a economy or a country which had gone through, had just achieved independence or was fighting for independence.
Right.
So after all those years of difficult times, everyone was struggling to make it meaningful. Buying a home, getting appropriate education, getting a rightful, meaningful food which was healthy enough was to be the agenda. And you were working hard for that with all sincerity,
Right.
without availing a shortcut. Beyond this, Americans also give on these premises only.
Right.
It has been with all the generations earlier. When there is challenge, there is a struggle, और संघर्ष में ही
Right.
जीत है.
Right.
जो अच्छे से इसको संघर्ष कर पाते हैं और उसके थ्रू आ पाते हैं, तो वो ही उस चीज़ के लिए एक लेवल की अपनी जीत अचीव करते हैं. इसके बाद जब एक लेवल का एक कॉन्फिडेंस आ जाता है, एंड व्हेन पीपल आर एबल टू मूव थ्रू दैट अचीवमेंट्स ऑफ व्हाटएवर दे हैव, today we are relatively comfortable. India becomes a fastest growing economy in the world and has now crossing the numbers and reaching number 4. Shortly before it was at number 5, and now it is number 4, and very soon it will be amongst the top few leaders also. We have always seen dollar as the ultimate
Right.
money,
Right.
but that is not the case.
Right.
Currency has been defined as a different value for exchange of a settlement of a transaction.
Absolutely.
So I cannot take currency as a independent value irrespective of what the underlying value is.
Right.
Coming back to my story related to how generations and economies evolve, with these struggling years, you start gaining authority. When you with your achievements, you have more authorities. And extra authorities they lead to arrogance.
Right.
With when arrogance comes, then you start misusing your authorities also. And
Right.
that is what was happening when US was doing, whether it was a 2008 related financial crisis or
Right.
whether it was forfeiting the swift money of Russia when they made money as a currency as a weapon.
Right.
So across multiple times there have been misuse of authorities, and when you start misusing it, people start trusting you less. You are still doing less because you have the convenience of printing the dollar.
Yeah.
And that is what American citizens have also started believing, that in any case government will take care of us. Why do we need to really stop on this one? That arrogance is your sign of disaster.
Right.
अहंकार विनाश का घर है. इसमें
Right.
मैं कभी कोई अलग चीज नहीं सोचता हूँ. मैं हमेशा इसी चीज को मेंटेन किया हूँ कि
Right.
डोंट गेट एरोगेंट, keep doing your work, maintain your humbleness, and you will enjoy your achievements.
So, but what do you make of Donald Trump then? Because, like you said, like how they always postpone the problem. I very clearly remember that even during 2008, also, when Obama came back to power and he had the responsibility of taking the economy back, he appointed the same head who was for the Fed, who was there during the 2008 crisis. So, I'm totally in tandem that US always delays the problem. They never fix it at the root cause. But if I look at the Donald Trump's presidency, specifically the last presidency, he was able to take back the economy in a good shape. Like that was the narrative which, let's say, developed. Obviously, then COVID came, things changed. But uh, given that the erratic nature of Donald Trump, he doesn't play by the rules. He does give me a feeling that he doesn't want such crisis to happen in the first place, right? Because for him, that vote bank is really important in that sense that Donald Trump is sort of the ultimate savior of the Americans. Point I'm trying to make is, if let's say this would have been the Biden government, I can still see that that crisis would not have been managed. But do you, just to as a glimmer of hope, I'm asking, can Donald Trump save this? That my question. Can he make interventions at the moment to avoid this?
I don't believe so. I don't believe so at all. Because the problem is not that Biden can't handle it or Trump can handle it or Obama did it and somebody else could not do it.
Hmm.
I could take you back to Nixon, and I could go to earlier presidents also. The fundamental problem is that you are spending more than what you are earning.
Yeah.
And it keeps accumulating. Earlier the borrowings used to be in billions. Then they came to 1 or 2 trillion, 300 billion, 500 billion used to be a large amount. And from there we migrated to trillions. America migrated to
Right.
trillions in terms of their borrowing, and they were really having their limits of for which they could not be permitted to borrow more than that amount. Invariably, with whatever political drama they have to play in their society, they come up with enhancing the sanction. The limits which have been increased when it was $30 trillion, and from there it was moved up to $36 trillion, and we are doing that today. Although the American debt borrowing time clock will still much higher amount, but they still maintain that okay, we are at $36 trillion sanction limit is what we are living with. Now they have already increased that limit to $41 trillion. So
Right.
there is nothing in sight which says that I'll be able to service $41 trillion at a higher interest rate scenario smoothly without repaying, because in any case I am a loss making economy. I
Right.
don't collect taxes. I give maximum subsidies or have commitments which I have to do,
Right.
and my cash flows, inflows are much less than my outflows. So I have to fund them with some borrowings. This is again coming back to that arrogance point of view. Once you come over there and you start misusing, it is very difficult for your positioning and profiling to go back. आप अपने कुर्सी जल्दी से नहीं छोड़ोगे। अगर आपको एक बार अहंकार हो गया है और आदत लग गई है उस चीज़ की, तो आप जल्दी से कुर्सी नहीं छोड़ सकते हो।
If let's say this was to happen finally, when losses, let's say, start to bite, what do you think how markets are going to react, and what should a normal retail investor, because at the end of the day it is the retail investor who loses money, so how should then retail investors sort of manage their portfolio then?
See, there are multiple stories, multiple aspects to your this question. In terms of retail investors, we are talking about Indian retail investors or Indian investors. First of all, the crisis currently is going on in the recessionary outlooks is there in Japan and Europe. Germany is already established under recession. UK
Right.
is going through its crisis. US already is going through a difficult phase, which everybody knows, and they are. That's why they have. It is everyone realizes that wars are being triggered by US.
Yeah.
At least in the unsaid columns, everyone understands that. Why are they conducting all the wars? To sell their equipment or sell their defense equipment and monetize that is the general perception.
Right.
Beyond that, they need to divert attention out of their focus and their debt. The strange table which is there is terms of who is owning the US debt. You'll be surprised when I tell you that UK is financing US, although
Yeah.
it is itself in crisis. Economy as low as or as small as Cayman Island and Luxembourg, which have a GDP of $3 trillion or $20 trillion, $20 billion, are funding $700 billion to US. And
So
I'm not saying that,
I want to make sense of this. You're saying that there is a country
which
which GDP, or let's say total value, it is actually servicing debt to the US, which is beyond that.
absolutely.
But how is that logically possible? Like, how does this happen legally? Like, how do you? I'm basically trying to understand from a very layman perspective that, so it is very clear as per SBI, RBI direction, what kind of reserves you need to keep, what kind of lending practices you have to follow. But here it feels like that there are no rules. You can do whatever you want.
The very simple thing is you and me are transacting. I'll lend you money, you lend me money. And we both keep continuing our business. Because the world thinks that we are managing business with them, although we are living on our debtors and creditors. That is how the world is working.
Yeah.
And US is able to use its influence to have financing or having its debt being funded by currently all the major economies, whether it is Japan, China, Europe, everyone is exiting, even the Middle East, Saudi is exiting out of US debt. They are sitting on $36 trillion of US debt. 25%, around 7.5 trillion, is being financed from, 8 trillion is being financed from foreign investors. Rest of it is held by their domestic institutions and banks only.
Right.
And domestic institutions and banks have increased it and funded it additionally for $4 trillion in last few years. Unlikely. It is mathematically incorrect.
Right.
Uh, the economies who are selling their debt, now somebody needs to buy these bonds.
Yeah.
We need to understand that how US is printing its dollar. US does not print any dollar in that format. When we talk that in terms of it is the debt they are raising. For debt raising, Fed conducts an auction. Auctions have to be subscribed by investors, which could be domestic as well as international.
Right.
And for subscription of those auctions, the investor pays dollars to Fed, which is used by the government. Last two auctions have devolved, where there have not been sufficient buyers for what has been paid into. What was required to be raised, the demand for those bonds is not there. Besides this, the concerns which keep escalating further is that now I was having maturity of bonds which I had to finance, and now I have seller of existing bonds also who want to make an early exit and sell their bonds.
Right.
They are prepared to sell it at discount. That is why my rates of interest are going up, because they have to exit it any case.
Right.
If they sell it at a discount, my inflation gets impacted. So, in an economy where the inflation is getting higher and the growth is getting lower,
Right.
we reach to a complete status of stagflation,
Yeah.
and which will be disastrous for the economy.
So, but I'll come back to that same question again. Where does this leave Indian retail investors? Because obviously, when the last crisis did happen, it affected all major economies. India, I guess, was still in a very, I would say, not as bad as how other economies were affected. But if, let's say, today a crisis were to happen, that same trickle down effect from US to Europe to other parts of the world, what would situation in India be like?
First of all, Vishwas, I am extremely positive on long-term India story. It's not my view. Across various economists and various reasons and factors on basis of which this view is determined.
Right.
Primarily, this is because of demographic positioning also. The average working age of the
Yeah, the
population in a
demographic
working
dividend of
age,
India. Yeah.
that demographic dividend is playing out well.
Right.
Now, vis-a-vis this, I have other countries which are sitting in a different format. While India long-term story is strong, other global economies come through their challenges. India cannot be the only oasis on the planet. It will be impacted if the whole world is taken by a storm. 2008, in that relation, I'll say, was a minor storm in terms of what is in the offing.
Hmm.
Because when a global currency is reset or a new alternate starts emerging, then things become that much more challenging.
Right.
And if institutions and banks fail in their commitments, currently Fed is able to pass on their pain to the institutions or the subscribers to their treasuries.
Right.
But when the institutions are not able to do that piece and pass on their pain going down further, part of which will certainly be going to the retail investors also. How bad can it impact, and will there be counterparty risk for Indian institutions dealing over there? Will this have an impact on the currency valuations? Will this have impact on the trade which is being conducted? So all across segments of multiple aspects of economies will be impacted badly. As far as the retail investor is concerned, there are two theories which I primarily believe in.
Right.
One is the basic balancing of greed and fear. As long as we are able to value things right in a diversified format, which the mutual funds were doing right to a stage and have been doing today also, barring pushing their number of NFOs and number of fundraise exercises being done aggressively and emerging with some new format of a new innovation and a new product being launched to mobilize additional funds. Retail investor needs to manage their greed and fear
Mhm.
and understand their asset allocation. India long-term story stands good.
Right.
There is nothing wrong, but the dip in between could be fairly volatile. There are times when it is more important for me to protect my capital than to generate returns. I like to hold on to my assets, save the principal, generate a meaningful return which is beating inflation very well,
Right.
and maybe a arbitrage fund or a debt fund or the
Mhm.
liquid fund could be safe. Getting into complex debts also could become difficult at time, because when the world is going through these kind of crises, then things can really get messy.
But the average retail investor would ask, because obviously the great access that they have is SIPs, right? SIPs and mutual funds. And like it is often said that no matter where the markets are, you should continue with your SIPs, because in the long term average cycle, you eventually win, right? But when you see such a volatile market, like you were saying, that can come in India as well, right? Who also advises institutional bodies. What would personally you do with your money?
What I'll suggest investors first, besides doing with my, and that is what I'll do with my money. My
Right.
approach has completely been customer centric. I don't work with any other approach.
Right.
And I see that there's nothing extra which I'm doing. I'm doing whatever I'm doing, and as per the risk return profile of and the time horizon of the investor, I'll be recommending him accordingly. What I'll be doing If I am comfortable not looking at my NAV and the portfolio value for next 3 to 5 years, I'll certainly keep continuing with my SIP because I cannot time the bottom. Perhaps I'll take off some of my portfolios and reduce my equity allocations right now, assess the positioning, and see that how we can profile it from here.
Right.
And that is what I'll suggest investors. Just don't chase just returns and don't get into that greed sphere at these valuations in this global volatility. And in the current scenario of aggression, we should not unless unnecessarily get entrapped into that.
Understood.
थोड़ा संभल के चलेंगे अच्छा रहेगा. इंडिया स्टोरी में कोई प्रॉब्लम नहीं है. बहुत अच्छी स्टोरी है, बहुत प्रॉमिसिंग स्टोरी है.
Sir, in the end, the last question that I would like to ask for wrapping up this particular episode is, in very simple layman terms, the repeat of the crisis, or let's say the soon to be crisis that we are referring to. What exactly is this, and how has this happened? Like, if you were to just sum up, what has gone wrong?
On global front, my concerns are primarily on two accounts. Aggressive debt borrowing. The world as everybody is into debt raising, unprecedented debt levels, rising interest rate scenarios, and less revenue generation which reconciles with that or corresponding whatever formats of creating value. Despite this, the valuations are at all-time high.
Hmm.
That escalates the problem. So
Right.
some smart money is pushing the packet down the investor, retail investors, the layman's throat.
Right.
Don't be the fallen one. Be a balanced one, and you will be able to make it reasonably well. If you stay invested for long term, you are not going to get challenged for sustain. But if you are going to track your portfolio on weekly and monthly and daily basis and track your NAVs, then there could be causes of concern. I am just suggesting be cautious. I am not saying that get out of this or don't get out of this.
Right.
You can stay invested. This is a good asset class to be in, but be cautious. And caution at times is always more helpful when the world is not at peace.
Thank you so much, sir, for sharing these valuable insights. Thing that I liked is that obviously there are a lot of people who make a lot of claims, but when it is backed by solid data, or when it is backed by solid reasoning, then eventually it finds its real value in the in the eyes of the viewers. So thank you so much, guys, and we'll be bringing more such episodes. And you can tell us in the comments if there are any specific questions that you would like to ask. We will surely take up that, and we'll be happy to answer them. Thank you so much.